We'll get to more stocks, etc. in just a bit from now. But let's focus on the numbers from Chola Investment. Now, Chola Investment, of course, has been the darling for stock markets for such a long time. It perhaps is the best performing financial stock in this year so far. It's also, of course, valuation-wise, moved up quite a bit, pretty close to where Bajaj Finance trades. Numbers for the first quarter on the AUM side has been pretty strong. I think some 40% growth. But net interest margins have come weaker. I mean, they're actually down on a quarter-on-quarter basis. Arul Selvan is President and Chief Financial Officer at Cholamandalam Investment Finance Company. Thank you very much, Mr. Selvan. Appreciate you joining us here on CNBC. Prashant, this side. Congratulations. Overall, AUM trends are healthy across various segments of businesses. But let me start with that 30-35 basis point compression quarter-on-quarter on net interest margins. What was behind it, and what are we seeing so far in Q2?
As we had explained even in the past, the large part of our book is vehicle finance, which is like a fixed rate book. So here what happens is it takes time for the new book to become a larger part with a higher marginal yield coming into play. So till that time, there will be some NIM compressions. On the other side, the cost of funds had increased a bit. So both put together has resulted in this NIM compression. But I am confident that this is where we are seeing the peak of the cost of funds. So from here, we should have some improvements on the NIM. But for any further actions by either on the Fed side or on the RBI side. But I think going by the trends, we are confident that the cost of funds would hold up and NIMs will improve.
So you're saying that the Q2 onwards, we will see if things stay as they are on the cost of fund side.
Correct.
NIMs will improve from here?
Yes, we are seeing the peak of the cost of funds, and we have done a certain amount of securitizations, etc. during this quarter, which would also help us to bring the cost of fund down in the coming quarters. Another reason is we also did a large amount of Tier 2 during this quarter, which also resulted in a slightly higher cost of funds. But I think these are normal routines, so I don't want to say these as any reasons for the increase, but yields will improve and cost of funds would hold where they are. So between the two, the NIMs will improve.
Okay, so you're expecting better NIMs as we go down the year. Sir, let's talk about business growth, which has been strong, both if I look at disbursals also at the AUM level. AUM growth of about 8%, just under 8% quarter-on-quarter. That's really strong. I think most of your segments are firing, but I want to understand this new business segment. What all classifies as new business? Because here, both dispersals as well as the AUM itself has shown a huge growth. What's powering this?
So we brought into play three new businesses. One is the SME segment. Actually, we've been handling that segment for quite some time, but within the Murugappa ecosystem. But we moved it outside the group also to having experienced it within the group for more than 3 years. Over the last 18 months, we have been scaling up this business, which is to address the needs of the SME segment, which is more for their working capital as well as for their equipment purchases, etc. The second part of the new business is the consumer and small enterprise loans, where we do loans for business purposes as well as to some amount of personal requirements of self-employed non-professionals, which is mostly unsecured. So there we have a good growth coming that we do either by partnering with fintech companies or on our own. Both we are having both models running, where the in-house model has a larger proportion and the fintech partnership is a smaller proportion right now. The third one is what we call as the secured business loans, where we have the loans given to very small vendors who will be wanting loans for their shop opening or for the business requirements again. Against here, this is a secured loan with the underlying property as a security, but for a small ticket, but a high yield loan. So this segment would be large part of this segment would be new to credit, while the CSEL, which is the consumer and small enterprise loans, would be 99% credit tested.
And you're expecting this kind of growth to continue in these segments, SME, small retailers, as you mentioned. So, I mean, this will continue to be such a big driver?
See, the growth you are seeing as percentage seems to be large because the base is small and the market is very wide, and you need to test these products with a larger proportion of sample. So that's what we are doing. But we are seeing good results. So we are confident that these will have good growth legs for us in the days to come.
All right. Hi, good morning, Mr. Selvan. Besides your operational performance, the other aspect that the street took note of was the board has approved fundraising via equity. That amounts to around 4,000 crores. My question to you is, what's the need to raise funds when your CRAR is so strong? And also give us a couple of details. By when will you need to do this fundraise? And will it be in tranches or will it be in one go? Please give us more clarity.
See, we are seeing good growth. Again, if you go back to our earlier interactions, we have said that if we are growing in the range of around 25% and returning a pre-tax ROTA of 3.5% levels, it is adequate to do a sort of a self-financing model on the car. But when we are seeing growth happening slightly at a larger pace, and for the intervening period, because of expenses, because of shorter trends of the NIM compressions we spoke about, we need to adequately protect the car, and that's where we got this clearance from board to raise 4,000 crores. Now, the 4,000 crores would come by way of partly equity and partly a convertible instrument. We will be starting to discuss with bankers, and we will come with more clearer mix of this as well as the process of this, and the timing of it in the next few weeks. So then we will be more able to clearly say what it is. Just got approved yesterday, and the board has given a internal committee, the flexibility to decide on this.
So before next results, will you raise this money?
Yes, if the market is good, we will certainly.
The market is good, sir. That's why I'm asking you.
Yes, see, the investor appetite and our expectations on pricing, etc., should match. That's the key.
Okay, sir, just clarifying one thing, and this is just some talk doing the rounds in the analyst community. Your provisions went up quite dramatically. I think there's a 24-25% year-on-year increase, and it's a massive increase quarter-on-quarter. People are trying to understand if you're trying to raise more money because you will have to build more provision buffers. And I go back to the new business when I ask that question, because the sense is that I think the NPA levels in that business are much higher than the overall average. Is it true that the new business NPAs are as high as, say, 5%, whereas otherwise you're at 4.3%?
No, that's wrong. See, I'll explain to you. First of all, comparing year on year, we are comparing at that point in time without a management overlay, I presume. When we came into March, every March we changed the PD LGDs of every businesses. During this year, when we changed, it had a slightly higher PD LGD impact because of the COVID years coming into play. So that has resulted in the need for higher provisioning as a norm. The second part is, as you see, when we are growing 40%, we need to create certain standard asset provisioning itself. That would by itself would be a larger part of provision that is being created. Between these two, we have a higher provisioning. As a matter of fact, we have been always questioned the other way, that our provision coverage seems to be lower than many others in the industry. So while we tried to bring it up to speed on that, now we are again being asked on the other side. So I think with the 40 to 45% levels of provision coverage is where we will be comfortable with them.
But are the NPAs higher in the new business, sir, compared to the other segments like home loan, etc.?
One part of the new business thing you would see is for the new businesses, we get reimbursements by way of FLDG. Now that FLDG is not adjusted in the loan loss, but it is shown as income on the income line, and the loan loss gets accounted as a full number, as if it has been incurred as a loss. So this may be the reason why there is a presumption that the new business is showing, but around 35 crores of FLDG which we received towards the new businesses has been shown as income in the income line. And this is as per the Ind AS accounting income. Yeah.
Yeah,
sorry.
I got that. Mr. Selvan, slightly a top-down question on asset quality, just to kind of press on that point. You know, not just for you, but other companies as well, how this credit cycle plays out with respect to asset quality, we will not know till much later, right? Because, I mean, that's the nature of lending as a business. Are you confident that asset quality and lending standards, etc., will be maintained at the very high levels that you've maintained them at? And I guess I'm also asking this in the context of you know, the challenge. I don't know how much of a challenge do you perceive this, but pressure from investors, you know, media, for example. We ask you every quarter what will be AUM growth and what will be NIMs, etc. I mean, so will you be able to kind of maintain those standards at very high levels and not loosen them at any point? I mean, just to talk to us about how you're doing that.
See, Chola's predominant focus has always been collection. Actually, with regard to every business, we have created separate verticals, right from sourcing, collection, credit and collection. So they are individual, so there's no mix-up in between the businesses with regard to people who are handling it. The second part is our focus with regard to the new businesses has been to make sure that there is no major losses in this, and we have ensuring it, and the past trend again shows you that we had been good in collection, and we have kept our the stage 3 or the gross NPA numbers in check in most part of our results. Only the aberration would be the COVID period, but for it I think the norms have been well maintained, and we are back to the pre-COVID levels with regard to stage 3 as well as on the gross NPA numbers. As a matter of fact, gross NPA numbers have come down, which is actually a positive indicator, because that means the stage 2 has come down, which is also, if you see the stage 2 numbers, the stage 2 has come down, which means the fresh flow in is reduced. The new businesses will have slightly higher NPAs, because their tendency is to have a higher NPAs, but we are keeping them in check, we are watching them closely, but I don't see that as a showstopper in the future. Actually, they are performing very well, and we are consciously and conservatively working on these new businesses.
Okay, got that. Thank you very much for joining in, sir, and clarifying some of those points and giving us a view on the business. Appreciate you being with us on the show today. Well, that's Chola Investment, and the stock has sold off, down about 4% right now. For the market, by the way, we took support exactly at the 20 DMA. Managed to hold it for now. Let's see. There's a long day that lies ahead. Quick break on that note. We'll come back on the other side and get chatting with Saket Jindal, Managing Director at Maharashtra Seamless.